Elon Musk, SpaceX, and xAI have officially announced a merger. So, what does this mean for Tesla shareholders? You definitely need to watch this. On February 2nd, 2026, the Nevada government website updated a corporate filing. It showed xAI being merged into a new entity called K2, which was subsequently renamed xAI Holding LLC. The SpaceX official website synchronized a statement confirming the acquisition of xAI. This isn't just a simple addition of two unicorns. This is the first time in human history that the hardware responsible for sending humans out, their SpaceX, and the software smarter than human SHI are being put into the same business landscape. There are three details in this deal that 90% of people missed. Let me break these videos down for you. First, why call it K2? It's not the world's second highest peak. It stands for Kardashev Type to Civilization. In 1964, Soviet astronomer Kardashev proposed a classification for civilizations. Type 1 utilizes the energy of an entire planet, Type 2 utilizes the energy of an entire star, and Type 3 utilizes an entire galaxy. Humanity is currently at Type 0.73. By naming this company K2, Musk is planting a flag. He wants to push humanity from the 0.73 civilization stage to 1.0. or even take the first step toward Type 2 within his lifetime. Remember Tesla's earnings report last week? Tesla holds $1 billion in SHI. After the deal, that $1 billion turned into equity in the joint entity of SpaceX and SHI. If you hold Tesla stock, you now indirectly hold SpaceX. So, everyone is asking the question, why did Musk merge SpaceX and SHI but not drag Tesla into? Many shareholders are collapsing inside, feeling like we've been abandoned. Actually, that's not it. Tesla doesn't need to be merged right now because the positioning of the three companies is completely different. SpaceX is responsible for transport, xAI is responsible for power, and Tesla is responsible for the terminal. The merger of SpaceX and xAI solves infrastructure problems, the stuff you don't see, but use every day when you scroll through short videos. You don't think about which server the video is stored on, but you know there's a data center running somewhere. SpaceX plus SHI aims to become the space version of Oz plus the space version of OpenAI. They aren't building products to sell to you, they're building a platform for other companies to run on. And Tesla builds cars, builds robots, things you can touch, sit in, and drive away. So Tesla is the terminal layer. Just like Apple doesn't go out and buy Amazon Cloud, and Tesla won't buy China Mobile signal towers because they aren't on the same level. Tesla wasn't merged not because Musk doesn't love it anymore, but because Tesla shouldn't appear in this specific setup. However, Tesla has $1 billion in SHI equity. Based on xAI's pre-merger valuation of $50 billion, Tesla held about 4%. But afterwards, what did that $1 billion equity become? We don't have a specific number, but we can estimate, using a conservative valuation. SpaceX is now $800 billion, xAI is currently $50 billion. After the merger, let's just say 1 + 1 = 2. That's $850 billion. Tesla's $1 billion equity accounts for 0.24%. If we look a bit further, with a SpaceX $1.5 trillion IPO market cap, and if SHI successfully raises funds and its valuation doubles to $100 billion, the total post-merger valuation is $1.6 trillion. Then that early Tesla $1 billion equity, if it appreciates proportionally, could reach for the $5 billion. So, did Tesla shareholders lose or win? Short term, you might not have gotten a great deal, because your holding ratio was indeed diluted from 4% to 0.24%. But long term, that $1 billion didn't just buy xAI. I feel it bought an entry ticket to SpaceX plus xAI plus all future space AI. So Tesla isn't just an xAI shareholder, Tesla is a silent LP of the entire space AI ecosystem. According to data from multiple research institutions, by 2030, US AI data centers alone will consume 347 gigawatts of electricity. Currently, the total US power generation is 490 gigawatts, so if development continues like this, 70% of US electricity will be used just to feed AI. Now, Musk has always had a plan to move data centers to space, but who has that capability? Right now, globally, the only rocket capable of launching a 100-ton payload is SpaceX's Starship. The space environment is extremely harsh vacuum, radiation. Ordinary data center chips placed in orbit would be scrapped in 3 months. xAI already partnered with NVIDIA last November to send H100 GPS to orbit for testing. They know how to do Radiation hardening and optimization. There are no engineers in orbit. Satellites must diagnose faults themselves, adjust power themselves, and optimize algorithms themselves. They need xAI. So if we connect these three elements, rocket, chip, and source algorithm, that is the core of the space data center, these three capabilities are indispensable, and the only person in the world who can do all three simultaneously is Musk. So, the merger of these companies isn't 1 + 1 = 2. Its compute power multiplied by transport capacity equals a monopoly on space infrastructure. Today, X's official website also updated, saying that through solar or orbital data centers, we can overcome Earth's limitations on power and energy. So all ground-based AI companies, whether OpenAI, Google, or Microsoft, will have to buy compute from SpaceX in the future. This isn't market competition anymore. This is directly an infrastructure monopoly. You thought SpaceX and xAI were competing with OpenAI? Actually, they've quietly become OpenAI's landlord. So the question is, why is the timing exactly February 2nd, 2026? I think this is the convergence of three time windows. The first is the countdown to the SpaceX IPO. Remember just 2 months ago? Bloomberg reported SpaceX plans to IPO in the second half of 2026, targeting a $1.5 trillion valuation. If SpaceX is just a launch service company, why is it worth that much? At a $1.5 trillion valuation, its price-to-sales ratio is 97 times. This pricing is betting on explosive revenue growth for SpaceX over the next 10 years, which investors might not buy. But after merging with xAI, the story changes. SpaceX is no longer a launch service company. It is a space AI infrastructure company. It went from a visible revenue ceiling to an invisible one. The post-merger valuation logic shifts from launch services to cloud computing, plus AI infrastructure. At this point, a 97 times P/S ratio doesn't sound so ridiculous. It might even look cheap. The second time window is a keynote for Starship. In the second quarter of 2026, SpaceX expects to complete Starship's first full orbital insertion and recovery test. If successful, the cost per single launch is expected to drop from the current $100 million to the target of $10 million. Musk chose to merge before the Starship test succeeds. If he waits until the test succeeds, then xAI's valuation wouldn't be $50 billion anymore. It could be $100 billion, even to $100 billion, or even $500 billion. Would SpaceX shareholders have to pay more than? This is a time arbitrage play. SpaceX shareholders bought shy at the current $50 billion price, betting on Starship's success, space data centers landing, and xAI's valuation exploding. The third window is the release of Grok 5. Grok 2 was expected in November 2024, Grok 4.1 in November 2025, and Grok 5 is expected in the first or second quarter of 2026. According to Shia's website and multiple industry analyses, Grok 5's parameter count is double that of Grok 4.1, with qualitative jumps in reasoning capability, multimodal understanding, and emotional intelligence. If Grok 5 launches successfully and really rivals or beats GPT-5 in performance, what happens to xAI's valuation? So, this is another instance of Musk's time arbitrage. 3 windows: before the SpaceX IPO, before Starship's success, and before Grok 5's release. Musk isn't waiting for the best time. He is manufacturing it. The merger logic is clear. So now for the most important question. Is this ultimately good news or bad news? After the announcement, Tesla stock rose slightly by 0.7%, basically flat. Many find it strange. SpaceX and xAI merged. Isn't that huge? But Tesla only has $1 billion equity, and the market is correcting its expectations. It wanted Tesla to be the major shareholder of K2, but K2 just became an asset of Tesla. The direction got flipped. So in the short term, Tesla faces sell the news pressure. Assuming a $1 trillion valuation for the merged entity, Tesla as holding sees a book value increase of maybe $350 million, only 0.05% of its market cap. That is insufficient to support a frenzy. Compare it. Microsoft holds 49% of OpenAI, Google holds 10% of Anthropic, while Tesla holds 0.2% to 0.3% of SpaceX and Shy. The participation feels insignificant. Critically, many institutions bought Tesla to front-run a SpaceX merger. Now that expectation has failed, disappointed selling shouldn't be surprising. Social media claims Tesla is abandoned or Musk is biased, but these emotions are short-sighted. If you only look at the short term, you're wrong. Tesla still has 3 long-term synergies. The first is cost synergy. Very direct. Starlink can help Tesla save money. Many people don't know that all Tesla vehicles need to be connected, whether you use FSD or not. Tesla vehicles' connectivity demand includes OTA software updates, security patches, new feature upgrades, etc., map data downloads, navigation, charging station info, vehicle diagnostic data uploads, and premium connectivity streaming, real-time traffic, etc. Right now, Tesla uses carriers like AT&T, Verizon, and Mobile. Tesla pays hundreds of millions of dollars annually to these carriers. Exactly how much, Tesla hasn't publicly disclosed it, but we can calculate. Tesla delivered 8.9 million cars by the end of 2025. Let's estimate active vehicles at 7 to 8 million, assuming the average monthly data cost per car is $5 to $10. If we calculate based on 7 million cars, that's roughly $630 million a year. That's a conservative estimate. This money currently goes to carriers. What if Starlink replaces them? Tesla is already pushing this process. Starting in 2026, they plan to install flat panel antennas on cars to connect directly to satellites, not needing to go through ground carriers. Starlink's marginal operating cost is extremely low. The satellites are already launched. Serving another million cars costs almost nothing. Tesla can use internal transfer pricing, bringing costs near zero. It is more like utilizing a cross-dimensional ecological advantage to silently reshape existing industry rules. For us, understanding this logical reconstruction is more important than staring at simple financial changes. Therefore, we have internally organized a key to interstellar wealth liquidation map to provide us with a structural perspective of the global game. I have placed this manual in the comments section. Click to receive it. If this $600 million a year can save Tesla $300 to $500 million, that can directly turn into Tesla's profit. More importantly, this is something only Tesla can do. Other cars? Their cars need connection to, but they don't have their own satellites. They have to pay. Carriers, Tesla, own satellites, own cars, internal settlement, cost negligible. So Starlink isn't making Tesla smarter, it's making Tesla's network cost approach zero. This is a cost moat only Tesla can build. The second synergy is data. Tesla shares FSD data with SHI, but not to make money. Here is the logic. Tesla has about 1 million FSD users, and with each vehicle generating massive amounts of data daily, this constitutes the world's largest real-world 3D database. xAI, like OpenAI and Google, currently trains mostly on text and images. But the next generation of AI needs to understand the physical world. If you want robots to work, in reality screwing bowls, moving boxes, or repairing equipment, the AI must understand gravity, force, and balance. This knowledge cannot be learned from text. It must come from real 3D physical data. FSD provides exactly this. It records real-time 3D vision from 8 cameras, vehicle decisions like braking and steering, and spatial relationships in dynamic environments like rain or snow. This is the core data for embodied AI. After the merger, SHI can use this to train Grok's physical capabilities, which will eventually feed back into Tesla's Optimus robot. Future Optimus bots on Mars will need to balance in low gravity and navigate without GPS skills. That must be simulated on Earth using FSD data. So, Tesla isn't giving SHI data to earn licensing fees. They are doing it to close the technology loop so Optimus can eventually operate on Mars. OpenAI has text, Google has images, but SHI has Tesla's physical world. This is the key difference that will decide the winner of the next generation of embodied AI. The third synergy point is equity appreciation, right? This is relatively hidden, but might be quite important. Ordinary investors cannot purchase SpaceX or xAI, but they can hold them indirectly through Tesla. I'm not making this up. This is a real dilemma for Wall Street funds. For example, Vanguard, Fidelity. These large funds hold massive amounts of Tesla stock. They want to allocate to SpaceX but have no legal channel because SpaceX is a private company. Now Tesla's $2 billion equity gives them a compliant side door. Look, Tesla holds $2 billion equity, accounting for 0.2% to 0.3% of the total. In the second half of 2026, if SpaceX IPOs at a $1.5 trillion valuation, then this equity could appreciate to $3.5 billion. In 2027, if this valuation hits $2 trillion, then Tesla's equity might grow to $5 billion. $5 billion for Tesla is indeed small, sounds very small, but don't forget Tesla can continue to increase its stake. Tesla has $30 billion in cash on its books. If they take out $50 to $100 billion to continue increasing their holding in SpaceX and XAI, increasing from the current 0.2 to 0.3% to 2% or up to 5%, then, when SpaceX's market cap hits $1 trillion, a 5% stake is $100 billion. Compared to 7% of Tesla's market cap, $100 billion isn't a small number anymore. And Tesla has 3 different ways to increase value. It doesn't necessarily need cash. One is swapping data for equity Tesla using FSD data for XAI to swap for SpaceX and xAI equity. Moat 2 is using chips for equity future AI7 or AI8 chips supplied to SpaceX's space data centers. Not taking cash, but taking equity. The third way is direct cash appreciation, just like I said. With $30 billion on the books, they can totally take out a portion. It completely depends on Musk's future willingness. So buying Tesla isn't just buying an electric car. It's a ticket for the arc Musk is giving Tesla shareholders. He hasn't abandoned Tesla. He is forcibly pulling Tesla from a car company into the K to civilization map through equity ties. Long term, Tesla is becoming an ETF of the Musk empire. Tesla might have short-term sell the news pressure, but long-term, there are 3 synergies. First is cost. Second is data. Third is equity appreciation. However, many friends are Tesla shareholders, and their current mindset is still feeling that Tesla is just a tiny supporting role. Maybe not even a supporting role, just a background extra. What can a fraction of a % equity do? I think if you think that way, it's a bit short-sighted. Many people think SpaceX makes money so Tesla doesn't. Musk focuses on SpaceX so he ignores Tesla. It's not like that at all. SpaceX does the infrastructure end, while Tesla does the user terminal. SpaceX earns infrastructure money, while Tesla earns user money. This is synergy, not competition. But if you ask me which company is more important long-term, I think my answer might surprise you. I think it might be Tesla. Why? Because Tesla is closest to the user. Microsoft spends $100 billion a year on infrastructure, betting that people will use AI in the future. Apple, on the other hand, directly stuffed AI into the iPhone, selling something you can use right now. In China, they use Baidu's model. In the US, they use Google's model. Apple directly turned itself into the landlord. Those companies burning cash on models became laborers working for Apple. This is what Apple taught us. In the flood of technological change, the person closest to the user is always the safest. And history proves time and again that companies closest to the user won't be eliminated in the end. Why? Because users don't care what chip you use or what cloud service you use. They only care if the product is good. Ordinary people might never sit in a SpaceX rocket in their lives. Many people might not even know xAI's grok. But Tesla's cars there are 6 or 7 million globally. Tesla is on the road. Every day so many people drive them to work, off work, pick up kids. Optimus robots are successful. In the future, there might be 10 million or a billion Optimus robots working in factories, doing housework at home, serving plates in restaurants. These are things ordinary people can touch and use. This is one of Tesla's biggest moats. It is the link in the Musk empire closest to the user. SpaceX can be strong, but you can't ride a rocket. xAI can be smart, but you might not use grok. But you drive a Tesla car every day, and you might hire a robot to work at home every day. The company closest to the user is the one that won't be eliminated. Where is Tesla's future value? I'll give you 3 time dimensions. The first is 2026 to 2027, the EP baseline plus synergy effects. Whether car delivery is 1 million, 2 million, or 3 million, that is stable future cash flow. As for synergies, Starlink can lower network costs. FSD data can feed xAI. These systems might show results very soon. This is Tesla's baseline. In the midterm from 2027 to 2029, robots can achieve mass production. This is Tesla's real explosion point. In last week's Q4 earnings report, it was already said that Tesla is using Optimus robots to work in the factory, small batch pilot production in 26, mass production in 27. How big can the Optimus market be? The global car market sales volume is 90 million units with a unit price of $30,000 to $50,000 and a market scale of 3 to 4 trillion. In the global robot market, if 1 in every 10 people needs a robot, 7 billion people globally means 700 million robots. Unit price $20,000 to $30,000. Scale is $14 to $21 trillion. This is 5 to 7 times the EV market. And robots aren't like cars, where you maybe don't need to swap for 10 years. Robots might need upgrading every 3 to 5 years. This is a continuous, high-frequency, high-unit price market. Coming to post-2030, this is the Mars terminal. This is the furthest, but also the space with the biggest imagination. What does a Mars base need? It needs robots. Needs to build the base, maintain equipment, mine, plant. All of this needs Optimus robots to realize. Second, transporting supplies on the Mars surface and exploring this requires Tesla's vehicle technology. Third is AI control, making autonomous decisions without human command. This is the extension of FSD technology. Do you see? SpaceX is responsible for sending people to Mars, but after people get to Mars, to build Mars, who works on the surface? Who lets humans survive on Mars in the future? It's all Tesla. A Mars base might need 1 million Optimus units, might need 100,000 Mars vehicles. This is a brand new market. Competitors haven't even arrived yet. Optimus makes Tesla take off, while Mars makes Tesla immortal. Okay, back to today's merger. Tesla's shareholders are panicking now. I think that's a bit short-sighted. The market only sees Tesla holding 0.2% as too little, but doesn't see that Tesla is the terminal closest to the user. The market's current logic is only 0.2% holding. Didn't get a bargain. Disappointed selling might happen, but the logic you should look at long-term is Tesla is the terminal. The Optimus market is 14 to 21 trillion. The Mars terminal market is unknown, uncultivated, with no competition. If you believe in the long-term logic that a short 5% to 10% correction might not matter at all, if you believe it will succeed, if you believe humans will go to Mars, if you believe Tesla is the link closest to the user, then today's little fluctuation is noise. Real value should show in at least 2 to 5 years. Essentially, you aren't betting on whether tomorrow is up or down. You're betting on what the world looks like in 5 years. Finally, let's go back to the opening question. What does CADA actually mean? I feel that February 2nd, 2026, this day isn't just the merger of two companies. This is the beginning of human civilization taking the Mars matter seriously. For ordinary people, you can choose to invest in this, invest in that, or whatever. You can even not invest. But there's one thing you have to do, which is you need to invest in yourself. You need to learn AI. Whether you believe in Musk or not, whether you believe in Tesla or not, there is a trend that is already irreversible. AI is changing everything. If you have a technical background, you can also learn to develop with AI, or at the very least, absolute worst case, you need to know what is happening in this AI world. So even if you don't want to learn anything, at least know what is happening in the world. Since you can't beat it, join it. Embrace change, learn, face the future. Tell me what more impacts you think this acquisition and merger will have on Tesla in the comments section. See you in the next video. This operation of making costs almost disappear through a bottom-level closed loop has essentially transcended traditional business ledgers. Originally scattered assets have achieved a premium from the Earth's surface to broader space through systemic synergy, signaling that future asset evaluation standards will completely shift toward the mastery of global certainty. When this global shift begins to permeate every investment decision, it becomes difficult for us to see the real path simply by capturing fragmented information. Therefore, we have internally organized a CADA interstellar wealth liquidation map to help us clarify this cross-dimensional game rhythm from a more systematic level. I have placed this manual in the comments section. Click to receive it.